Hello, everyone, and welcome to this edition of Investing with Confidence, sponsored by Online Trading Academy. If you're a first-time listener, thanks for stopping by. I am Josh Lilquist. I do have my good friend and my good pal. He is the one and only stock master, Mr. Al Connickson. Al, how are you doing today?
I am feeling great again, Josh. Always feel good when we're doing this show.
It's a fun time talking about the stock market. The market's always moving. We're young whippersnappers. We're always moving, so that's what we got to do. We got to keep things moving, and that's a lot of the things that we're going to talk about here today on the show. Is the markets keep moving, and in which way are they going right now? They are actually going up. The S&P 500 actually from the lows up roughly around 18% on the since the lows, which is actually still down 10% on the year. And that is a lot of things I do want to talk about here today on the show is where will this market go next? So stay tuned. That's exactly what we're going to discuss. Our sponsor, Online Trading Academy, 25 years teaching people just like you how to trade, how to invest with the stock market, but also not just the stock market, options, futures, Forex, cryptocurrency, whatever that soup du jour of the day that you like to trade and invest. Online Trading Academy has content and education on that. So, Al, with that, the markets, as I mentioned, S&P 500 up about 18% from the bottom, which is actually still down on the year. We have oil slowing down a little bit in a slow downtrend right around that $90 a barrel. We're seeing that at the pumps. I've seen under $4 recently. One thing that concerns me, though, which we've been talking about for the last probably month and a half here, is this U.S. dollar. The U.S. dollar really drives a lot of price.
Right.
If the dollar is usually strong, the stock market is usually down. Mm-hmm. And what's happening here is the market's been going up, but so has the dollar.
Right.
So is there a little head fake in the stock market? I don't know. But let's discuss a lot of that. And also, Al, we've seen most of the stocks in the market, overall market, are still actually down. But we have that one stock that I think is almost that clock that just keeps on ticking. It is the Apple stock.
Right.
And Apple is actually, looking at it here today, roughly in that $173, $74 mark, which is nearing the all-time highs again. So we're seeing some confusion in the markets, Al. Let's help our listeners be unconfused. What's your take on the market?
Well, there are things happening that don't seem to make sense like it used to. You mentioned oil, and and the fact that typically, or the dollar and oil, there's usually a correlation between what happens with oil and the dollar and the stock market. That's not necessarily happening right now. And you asked, I think, in your introduction there, whether the market was going to continue to go up or not. I'm going to tell you what direction it's going to go right now. So write this down, folks. It's going to go up, down, or sideways.
So that's three directions?
That's three directions.
And the market always has three directions.
Oh, so this was not
no surprise
no
here.
News there, folks? Okay, but here's why I brought that up, is because it is going to move up, down, sideways. And we've seen the market come off of a big downturn, and it's been going up. I think people have kind of reacted to the last inflation report, assuming that means that inflation is going to start to come down or at least not continue to go up. That's an assumption. What if that doesn't hold true? Well, then the market's going to react the other direction. Here's the important thing, and the great thing for us is that we can benefit regardless of what direction it's going. We always talk about how great it is to be doing this show and how great it is to be able to participate in the market. And that's every direction. And there are assets and strategies that you can use and you should learn to use, because we don't know for sure if the market's going to continue to go up. But we know that it's always going to go through corrections. There will always be bear markets. And those are situations that you want to be able to benefit from and not go through what probably a lot of you have gone through the first half of this year. And that's having seen your portfolios go down in value, especially your retirement portfolios. Why is that? Why does Wall Street not ride that down, but the public does? Well, maybe they're using things that are a little different than what they're teaching you or showing you how to use. That's what we do. We kind of pull back the curtain on that and show you what the big institutions are doing.
So what is that concept, though, Al? What is that concept of, if the institutions are profiting in down markets, And the public can do that, but they don't know
Sure.
how to do that. What's that concept?
Well, there are ways of participating in a down market. I think the one that you are referring to is shorting the market. There's two sides. There's typically the market's going up or down. It does go sideways some, but most of the movement is up or down. If it's going up, we call that the long side of the market. If it's going down, that's the short side. The money you make in either up or down markets is exactly the same, but most people only know how to participate in an up market. And that doesn't necessarily mean that you'll make money, that you'll be successful, but that's where you have your opportunity. So if you're not participating, if you don't know how to kind of play that short side of the market, in your entire lifetime, your financial lifetime, half of it is basically wasted time. You might be losing during that time period or breaking even or just waiting for your portfolio to come back.
I don't think people take that into account, Al, is that time that they lose. And that's why most people have such small returns over a lifetime in their portfolios.
That's exactly right. Well, think about it. If your portfolio goes down 50%, which happened to a lot of people in the year 2000, the year 2008, possibly the first half of this year, that means your portfolio has to be back 100% just to get back to where you were before. Wall Street's going to put you into a portfolio that they'll tell you to hold on to long term and don't worry about those drawdowns because the market comes back. But what if it takes 5 years or 10 years or 15 years just to recoup what you just lost? That is lost time. That's one of our most valuable assets. We can't get that back. And we want to make sure that whatever time you have potentially to be in the markets, that you have the opportunity to benefit regardless of the direction that the market is moving.
Yeah, speaking of the direction, it was funny, was it last week we were watching TV, I think CNBC or what are the news channels, and I was like, gosh, boy, the market's really moving. And I said, Al, which way is it going to go here today? And is it going to go up or is it going to go down? And I think you said, yep. Mm-hmm. Because it's going to go both directions. Yes. But that's what we talk a lot about in these investing classes that you teach here at the Academy. I teach these as well. And we talk about all directional strategies. And it doesn't matter which way the market goes. We just want it to move. Whether you're in 401ks, IRAs, there's strategies for both directions. But also, it doesn't matter the duration of time as well. Because a lot of people think, okay, short term, long term. I want to discuss that a little bit in the next coming segments here. But with these investing classes that we have at the Academy, these are free classes. And it's really introducing the markets to the people, how to get started, how to make smarter investing decisions, and start that today. Text right now for 2 tickets for a free investing class for you and a friend. Text the word investing to the number 210-210. That's text investing to the number 210-210 for 2 free tickets for the investing class at our local academy and a quick start kit, which will help you get started right away. So, Al, coming up in that next segment, I do want to continue to talk about those income strategies for all market conditions because we have a lot of people that want that second source of cash flow, and you need to do things a little bit differently than what I think most people think they should do. This is Josh and Al, Investing with Confidence. We'll be right back.